Trading Nut, episode 71.
So I'll wait for price to just break a level of resistance, right? Because what that tells me, if, buyers have held this level, or sellers in this case have held this level of resistance, 1, 2, or 3 times, right? Once buyers have broken through that level, I want to see if price will come back to that specific level that was broken, and if buyers will actually hold that level as a newfound level of support.
The market's going to do something. Your job is not to fight it.
The market never, ever runs away. It's always there.
That personal diary of trading will make you a much better trader than...
I could be right about the direction, but wrong about the trade.
Don't focus on the monetary side.
Trying to make too much money on a trade is what I have seen killed every trader.
Your losses offer you some of the greatest insight you can find into your mistakes.
Relax, learn the process.
Candlestick pattern trading is a freaking trap.
Don't be in a rush to become a millionaire.
Let the market tell you what the market wants to tell you.
This podcast is not financial, trading, or investing advice of any kind. What's up, traders? Welcome to another installment of the Trading Nut podcast. I'm your host, Cam Hawkins, and today we've got a young trader from Miami, Florida called Raul Gonzales. Now, Raul is also known as Lambo Raul on Instagram. Don't let the Lamborghinis put you off, guys. This guy can trade, okay? We shot a video after the show. Look, first of all, the show's amazing, so you're going to learn a lot in the show anyway, but then we shot a video after the show which blew me away, okay? Within such a short period of time, you could really tell the level of understanding that Raul has of the markets, and you'll learn 3, 4, maybe 5 things in this one video. So guys, listen to this episode first, then head over to the video. What Raul does do is he takes traders and he looks to get them funded. He's funded himself with FTMO multiple times, so that's one of the funding providers that are out there. There are a number of other funding providers that I do have listed on my website, and I want to find out a bit more from you guys about what you think around funding providers. And so these are, if you're unsure what they are, they're basically outfits, you could call them trading prop firms. They let you trade their money for a cut or a profit split of the earnings that you make. Okay, so you might go in there and qualify, get a $50,000 account, and you can trade their $50,000 account and get a cut of the profit. So if 1 month you make 10 grand, then you get 50%, you get 5 grand of the 10 grand you make. So that's how it works. I've got a survey up on tradingnut.com, so if you head over there to Raul's page in particular, I'll put a link to it on there as well, and I might put a few links around on the site as well. But if you want to go directly to there on your phone or wherever you're listening at the moment, head over to the description. It's in there, or just type it into your browser. It's tradingnut.com/funding survey, all one word. Okay, guys, it'd be great if you could do that after the show. Let's get into it. This is fantastic stuff with Raul. Guys, you're going to hear a little bit about the COVID-19 lockdown. I think I was in it, and he was just about to go in it as well. So there's some interesting stuff there at the start. Here we go, guys. Enjoy. All right, folks, we've got Raul Gonzales here on the show, all the way from Miami, Florida. We're in the same boat here today. We're both on lockdown because of this coronavirus thing. Yeah. So how's it going, Raul?
I'm great. Thank you for having me. By the way, it's an honor.
Oh, look, it's great to have you on the show. I mean, I first sort of found out about you on Instagram, jumped on there, and it was a sort of typical... I suppose your classic Instagram profile with all these, the ones that everyone goes, this guy's just, selling the dream, blah, blah, blah. There's, let's, for the guys that obviously don't know Raul's Instagram, it's cool, he's called Lambo Raul. So it's sort of, but I mean, do you want to give the guys a backstory just so that people don't go running for the hills? Because I know a lot of the guys here are sort of quite wary of scammers and stuff, and why you've got this Instagram account that's full of Lamborghinis and jet skis and all that sort of thing.
Yeah. I mean, basically my Instagram, I put my life. It's not like, it's a marketing technique, nothing. It's just my entire Instagram just shows my actual lifestyle and the life that I truly do live on a day-to-day basis. So it's not like I made my Instagram just to promote anything. But basically, how I started trading was quite an interesting story, I want to say. So I was maybe 15, 16 at the time. I was going to school like your average person, I guess, going to high school. And during that time, I was actually diagnosed with Crohn's disease. So I was having these really frequent hospital visits. I'd be in the hospital probably every other week for a span of maybe 3 to 7 days. So that happened for a couple of months, and I ended up getting kicked out of high school because I missed too many days of school, even though they were all excused. The school is a little bit weird. So I had to actually enroll in online school. And once I was in online school, I was really doing nothing with my life. Didn't really have any friends at the time, had no girlfriend. So it's kind of just me and the computer all day. So, what I started to do, I had like a little hustle, if that's what you want to call it, on the side, just to bring in some money, to pay for, just regular stuff, computer, anything I really wanted. All I would really do is kind of build gaming YouTube channels, flip them, if that's what you want to call it, gain a bunch of subscribers, and then sell them to other people. So that was kind of how I started making money online. But then, of course, like any other person, I looked up other ways to make money online, and that's when I came across trading stocks, obviously, and then Forex came into light. I didn't really join any MLM like a bunch of people have or anything, but I really just saw Forex that kind of just popped up next to the stock market there on the Google search. So I did more research into it. I believe I was maybe 17 at the time, so I started trying to just look for any free information online, YouTube, this and that, blah, blah, blah. I guess it's kind of like the average person's story when it comes to like learning how to actually trade. And then I opened up my first live account when I was about 18. I took an online course. And then from there, it was more or less just trial and error. That's pretty much how I got started trading. So around 18 years old, 17 years old is when I started getting informed about the financial markets, the stock market, the currency market, cryptos, and everything else. That's how I kind of got into the whole gist of this trading world.
And so that first course, I mean, what did you decide to go for?
It was really just like a technical analysis course. It showed you like the basic technical, so support and resistance, basic price action, supply and demand, quarter points, trend lines, Fibonacci. It showed a bunch of other indicators that I don't use. I try and really simplify my trading as best as possible, so I don't really, get confused. I see a bunch of people nowadays with, a bunch of lines on their screen with, a bunch of indicators, a bunch of Fibonacci ratios. I try and keep things as simple as possible, so just do my best to read price every single day. That's really one thing that helped me a lot with my trading, was really just back testing and learning how price moves on a specific currency pair, like on gold. All I would do is pretty much just go back, maybe a year's worth of previous price action data and just read what each and every single candlestick is telling me. I feel like, each and every candlestick has a different story to tell itself. So, a candlestick on the daily versus a candlestick on the weekly versus a candlestick on the 4-hour. Each candlestick kind of shows more or less a story, or each candlestick is a book. And, when you break it down to a lower time frames, that book now has chapters and then now has separate pages. So that's kind of how I look at price action, is just to read what price is trying to tell me best. And I keep things as simple as possible, just looking at structure, supply and demand, support and resistance. And I do use Fibonacci as well. So really, if you were to sum up my trading strategy, it's all about just structure, Fibonacci, and moving averages, if that's what you want to call it. But I get asked the question a lot if I'm more of like a fundamental trader or a technical trader. Before, I guess it's my trading is kind of evolving as time goes on. Before I'd be like, only technicals. Now I'm starting to incorporate a lot of fundamentals into my actual trading as well, which is something that has been new. So like the course that I first took only really just taught you like the basic technical analysis. And the money management that the course taught that I took really wasn't that great. It was like, a 5 to 10% risk per trade that you place, which is something that I had always struggled with in the beginning, because that's how I thought you were supposed to trade. So there was a lot of things that changed over time since I've taken that online course. And so I didn't really take any a bunch of online courses like a bunch of people did as well. It's just like that one online course, and everything else was just trial and error from there, which was I don't know if you'd want to call it a mistake, but that's just the way I experience things. You could tell me, don't over leverage all your positions, and I'm the type of person where I have to experience that and then, learn from my own mistakes from there. So that's kind of how I evolved with my trading.
So it's a lot of detail in there. I'm going to dive back and ask a few questions on that. So going back to that, like if you, I'm sorry, let's just get a sort of frame of reference here first. What age are you now?
I'm 21.
21. Okay, so we got 4 years there. So when you did that online course, you came out of it and you thought, okay, did you start like applying what these guys had taught you?
Yeah, I did. It's just like kind of basic, just price action using fibs. I started applying what they taught me, and then obviously, with my personality, they basically gave me like the foundation of how they traded, and then I added onto that, how it suited my personality, how I wanted to trade, because there were more higher time frames, like 4-hour daily time frames, and then I actually took that foundation and I put it down to more of a lower time frame, such as like the hour and the 2-hour and the 4-hour as well. So that's how I kind of started with that, and then I obviously started modifying things here and there as time went on to try and make my strategy quote unquote better. That's one thing that I kind of focus on. How can I, not in the sense how can I get better, but how can I stop being bad, if that makes any sense.
And so, I mean, I'm just like thinking, right, so you're at the, you've got this information, you're now at the price chart, and you're thinking, right, let me go and start back testing some of this. And can you sort of walk us through like how that back testing sort of session would go for you in terms of like things that you might have been noting down and things that you might have been like keeping an eye on when you're looking at various things on the chart and your candles and that sort of thing? How did that look like?
The first things first, I'd have my backtesting chart. So, it would include the pair, the date, the time, and then obviously, pips loss, pips gain, and then account balance and things of that nature, right? And then obviously turn off all distractions. And then I would pretty much just go on TradingView and go back to a year's worth of data. So I'd backtest like the last year. And, when it came to like actual notes and stuff, so I'd have the foundation. So what I look for in my strategy is typically a break of structure or a break of a level of support. And I want to see if buyers will actually hold that previous level of resistance as a level of support, right? So it's all about buying versus selling pressure to me, right? So to put it in example, it would be more or less like, okay, at first it started off as, okay, I want to see if price can hold this level that I previously just broke, and then I'll enter directly at this level with like a limit order. I'll put my stops above a certain Fibonacci PRZ ratio. So if price pulled back to like the 50%, my stop loss would go above the 618, in between the 618 to 786, right? And then the targets would be the previous low, right? And one thing I noticed about that is more of my actual trades would get stopped out, because sometimes price would just go and hit the stop loss, or sometimes price would activate me and then go into profit and then hit the stop loss. So what I ended up incorporating and modifying there is I took note of that, obviously, and then I would be, okay, let's wait for price to come to this ratio, and let's wait for a price action confirmation, like some form of a candlestick confirmation, right? So now when I entered on that candlestick confirmation, I would put my stop loss almost less in the same area above the next PRZ ratio. So if price came back to like the 50% where we do have that previous level of structure, and let's just say it was a level of support that was broken and sellers are actually holding that that level of support as a level of resistance, then, I would find it would actually increase the probability of the actual trade going in my favor, right? So those are just little things that I was kind of noting down here and there, along with using moving averages overall to kind of tell me, what kind of trend we're in. So I use a 20 and 50 simple moving average. So if price is riding under both of those, then I'm typically looking to go short, right? So it's kind of like a mixture of a bunch of confluences, if that's what you want to call it, to increase the probability of the trade setup itself. I would find that in my back test, if I only had 2 confluences, typically the trade would end up becoming a loser. But if I would have 3 or 4 confluences that kind of tell me, okay, we're all in the same bias, if that's what you want to put as a title, right? We're all looking to go short, right? Then typically, that has a higher probability of actually going to targets than it would with a trade that only had 2 confluences. So that's kind of more or less our trade. It's really all about probability. So the more confluences I have in a specific trade setup, the higher the probability the setup actually is.
And how do you work your money management around that? So now that you've got it, say you've got 4 confluences running together, would you risk more?
Not at all. It really depends. Like if I have four confluences, at most I'm typically risking like 1 to 3%. 3% is on a very rare occasion I'll risk 3%, but I try and keep it as consistent as possible. Sometimes I actually may scale in on a position, but that's something I really struggled with in the beginning was money management because I would grow my account, but once my trading strategy had a losing streak, then, all that profit would actually turn into just loss and drawdown. So that's something I really struggled with in the beginning was money management and looking at my risk reward ratios because the thing about a pullback strategy from what I've noticed over the last couple of years is that it does lose a little more than it wins, but it is compensated by a higher risk reward ratio. So you'll be trading for a risk reward ratio that's like a 3-to-1 or 4-to-1 sometimes, right? So, money management is something I've been really strict on. So I typically just stick to risking 1 to 2% per position that I'm actually in.
Okay, and so in terms of scaling out of those trades at all, where do you move your stop to break even and take off some risk off the table at any points?
Yeah, so it all depends on the risk-reward ratio. If I only have a risk-reward ratio on a specific trade that's like a 2-to-1, then I'll just close the entire position. But if it's a much greater target, and I feel like there's enough volume for price to go in my direction even further, then what I'll do is at a specific risk-reward ratio, like let's just say 2-to-1, I'll move my stops to break even, close half my position, and that'll be like my running position where I'll trail my stops from each structure high, probably like on a lower time frame, such as like a 15-minute. More or less to say.
And so timeframes, how do you work the timeframes? Are you trading multiple timeframes, and which one do you use for your entry?
I do always look at every single time frame. So I'll always start with the top-down analysis. So I'll start off at a monthly time frame, then work my way down. Just take notes as much as possible on what those time frames are trying to tell me versus the lower time frames. So I'll use an overall like directional bias based off of a higher time frame, like a daily and a weekly. Then I'll break it down to a 4-hour for overall structure, use my Fibonacci ratio tools to see where we are in the trend. If price is trending, because sometimes price may just be consolidating. If price is consolidating at that point, then I'll look where we are in the consolidation range. If the consolidation range is big enough for me to actually trade itself. But typically my entries will be based off of like a 15-minute time frame, and then my directional time frame will be like based off of the hour or the 2-hour in that case.
And how many trades are you running a week?
It really depends on the market conditions because sometimes we'll have a trade that I'm holding for at least 2 or 3 days, which typically I don't like holding my trades for 2 or 3 days. I like to just get in and out that same day. But I could take anywhere between 5 to 15 trades a week, I want to say. It really depends on what I'm doing, if I'm scalping or if I'm more or less just day trading at that point in time.
And so what does your typical day look like then? Other than obviously on the jet boats and the Lambos, and include those as well if you want.
Typical day in the life, I guess you could say. It really depends if I trade the London or the New York session. Typically, I'm trading the New York session nowadays, so I'll wake up around 6:30 in the morning. Really quick, go grab me a cup of coffee, give me some time to wake up, and then I'll start my pre-market analysis around 7 o'clock. So that's when I'll be doing my whole top-down analysis, putting my key levels, identifying the trend, things of that nature. Then typically I'll be actively trading from like 8 a.m. till about 12 p.m. 1 p.m. is where if I haven't made an entry yet, then I'm not going to trade because that's when volume tends to die off, right? So, at that point in time, I'll be done trading. Then, I'll go out, I'll go to the gym or, I'll go jet skiing, do whatever I kind of want to do in that sense or do any work that I have to do if I have any work. Then I'll come back around maybe 5, 6 o'clock at night, and then I'll do another top-down analysis, which will be my post-market analysis, where I'll be looking at my trading journal, see, what mistakes I made, where I could have improved, along with, what I'm going to be looking for the next trading session coming, where I could see price and look for potential opportunity within the market. And then after that, that's about it. I do whatever I want for the rest of the night and just go to bed and, do the same thing the next day.
And so when you've got trades running, how do you manage those? Like if you're out for the evening or you're at the gym or whatever you're doing.
I'll set alarms for every like hour candlestick close. So I'll just, if I have trades running, I'll monitor it on my phone or my iPad. Typically I have my iPad on me. Every hour I'll kind of just try and take a break. If I'm not too busy, and kind of monitor my trades, see how my position's doing, see if the trade setup is still valid, and then kind of just move on with my day. Or if, I'm taking a setup based off the 4 hour, then I'll check back on the chart every 4 hours just to see how that candle closed and so forth, look at the daily close and things of that nature.
And what about the weekends? Are you holding stuff over the weekends?
No, I used to before, but then I would see that I take more losses holding trades over the weekends, and I definitely just decided to eliminate holding the trades over the weekends. I also decided to eliminate like not trading in session. These are like things I learned over time is trade during a specific session, especially if I'm gonna be scalping or day trading. Don't take trades at random times. Just little things like that I've kind of modified over time just to increase my profitability. It's going to be different for everybody, but that's just, me in specific. I'd rather just not trade over the weekends and, risk a gap in the opposite direction. So there's been times where, I would hold a trade during the weekend and price would gap above my stop loss. And I'll take a bigger loss than what I intended on taking. So, I've learned some hard lessons from holding the trades over the weekend.
Yeah, it's a lesson that most people go through at some point,
Yeah.
and then stop trading the weekends. So instruments, if you had to list off all the ones that you focus on, what are they?
Right now, it's just gold, the Dow, and S&P. Those are the only instruments that I trade. And if you were to ask me that 2 years ago, it would be multiple different instruments. There would be like cryptos included. It would be commodities, currencies. Something I've really learned over time is just, you can focus on, if you can focus on just, 1 to 3 pairs, and you will be a lot better off than trying to, master every single pair that's out there. It's more or less like, if you want to put it like this way, right, it's more or less like having one girlfriend versus having, multiple different girlfriends to manage, So I typically just try and stay with, those 1 to 3 pairs.
And just on those pairs, I mean, this past few weeks, they've all dropped, right?
Yeah.
They've all
except
Dow
for
and Dow and S&P have dropped significantly. Yeah. So, what's the? How did you sort of factor in the fundamentals around what you were doing, or did you even need to? Could you see it coming?
I didn't see the drop on the Dow and the S&P coming. It's funny enough because I was actually in on a couple of short positions at around 2,900, right? And I got out of those short positions at around 2,700, and price kept dropping. I feel like, the fundamentals will tell you the overall direction, but the technicals will tell you when to actually get in. So I never knew, price was going to drop to, the Dow dropped to, I believe, was 1,800, and, the S&P dropped around the same. Right. But, typically, I did take a couple shorts. I just like to trade with the trend, if that makes any sense. I obviously didn't see this big drop coming. I did see, the coronavirus and everything was on the news, but I never really expected it to kind of go how it did, if that makes any sense. I never really expected this huge bear market to come in. You're talking about, the entire bull run since, what was it, a couple years ago? Yeah. Since, I want to say, what, 2013?
Yeah. 7 years ago.
Since December, yeah. Just completely eliminated.
Yeah.
In the end of a couple of months. So, it's pretty crazy to see that happen. And to experience that as well. You hear about, I wasn't trading during the market crash in 2008, but, I heard about things like that, and to actually be experiencing something like this is, pretty insane. It's something different, definitely an experience, I want to say. And then with gold too, I believe, gold was at all-time highs for the last couple of years or not all-time highs, was at crazy highs at 17, almost 1,800, and then, prices dropped back down in the 14s, and now we're trading back up near the 17s again. So really interesting to see, all the volatility that's in the market nowadays.
Yeah, it's crazy. What about new? So you mentioned you're spending a bit more time focusing on fundamentals. I mean, how do the fundamentals sort of play into your trade plan?
Like I said, the fundamentals will typically tell me the direction, and then the technicals will tell me when to kind of enter, if that makes any sense. So, I'm trying to get more educated on the fundamental analysis overall for the long term. I know it's just going to benefit me in the long term. I know there's people that only stick to technicals. Now, I would say definitely I'm more of a technical trader. I really just like to focus on price, right? But I'm definitely starting to incorporate fundamentals more or less into my trading plan, looking at news every single day. What high impact news do we have? If we do have any high impact news, I'm not going to trade. Just like we have an FP on Friday, I'm typically not going to be trading, that news. I tend to just avoid that overall.
So what about the guys out there that are like, I suppose they're struggling to get to the point where they're making money consistently. What do you think made you different from everyone else out there, and what do you recommend steps that others might take?
Well, the way I saw trading is, I'm not sure if you've heard of this, but it's 80%, psychology, 20% everything else. So I really tended to focus just on the mindset. It's really all about self-improvement and keeping a trading journal and tracking your progress and, kind of marking off things that you need to improve on later on. Like if you notice you're over trading, okay, let's set a rule for the maximum amount of trades I'm going to take per day. If I hit that rule, then I'm going to completely cut the trade. But honestly, I think the biggest issue with a lot of people is the money management portion. I feel like a lot of people really don't follow a strict money management rule, along with being undercapitalized, because a lot of people are sold the dream, right, that you could turn, very small amounts of capital such as $500 into, six figures and whatnot, when I don't believe that's the case. I don't believe, that's what trading is meant for, if that makes any sense. Because the one thing I've learned is, yes, you can turn, $500 into $20,000, right? But overall, in the long term, that's something that's not sustainable. So you need to find, a percentage-based gain that is sustainable, like, making 10%, 20%, whatever the case might be per month, depending on your risk parameters, right? If that's something that's sustainable to you, then you can definitely, look for larger amounts of capital and get funded, right? If that's the case needed to be, right? If you're someone that's undercapitalized, then the best thing for you to do is, try to apply for like a firm such as FTMO, and actually get funded by them, so you can, focus on that proper money management system. And then, obviously, the profit will come later on. But I feel like the biggest issue with people is just money management. And, it could be a combination of a lot of things, hopping over from strategy to strategy, not keeping track of your progress, not logging your trades, not seeking to improve. But I would say, it's just kind of focused on the main problem first, right, which would probably be money management, and then look to improve from there, right? Because the strategy is really, it's fairly simple to understand trading strategy, right? But I feel like a lot of people fail to understand, that you're not really going to get rich quick trading, along with, money management is a huge portion, especially when your trading strategy is starting to see drawdown and looking at things like risk over ruin and, just basic things like that. I feel like is really what holds people back.
Because you mentioned a bit earlier that you typically suffer, I suppose, more losses with the kind of strategy that you're running, but your profits obviously outweigh that. I mean, how do you? And you talked about working on your mindset. How do you deal with this? A potential run of losses. How do you work with your mind to make that, if that's even a thing? How do you make that sort of not seem so bad in your own mind?
So I do trade multiple different strategies, you know what I mean? My main strategy, I would say, is more or less just a pullback strategy, waiting for price to pull back into a certain area for me to continue with the trend. That strategy does lose more than it wins, from what I found, right? So it'll have maybe like a 48% or 45% win rate, whatever the case might be. But like I said, again, it is compensated by a higher risk-reward ratio, right? Yeah. So, something I found over the last couple of years is, the more losses that I take in a row. So like, let's say if I take, 2 or 3 losses in a row, then it's going to be very hard for me to execute my strategy with precision, and trying to be as less emotional as possible, right? On the next trade, with that, right? Something I've really found that's helped me with that is just really controlling the position sizing and minimizing my losses as best as possible, and really just focusing on the percentage-based risk, right? So I'll look at it, I lost 4 trades in a row, right? It'll be like, okay, well, I mean, it's only 4% of my account. It's relatively not much, right? And if I have a 1 to 4 risk reward ratio on this trade, it's like, okay, you know, I can risk another 1% on this specific position to gain, you know, possibly 4%. Then I'll be, you know, back up 3% or whatever, and I'm only down 1% on this specific position. If that's what you want to look at it as. That's kind of how I tend to look at things. It's really like, okay, you know, I'm really only down 4%. You know, I'm not down 20, 30% on my account. I have really nothing. I really have nothing to worry about. So, you know, I tend to assume my strategy with precision. You know, when I really just look at the percentage and stop looking at the monetary, so if that's what you want to call it.
Okay, cool. That makes sense. So yeah, just focus on the money management, and that's going to help with, you know, having consecutive losses. So let's go into the quickfire round. How long did it take you to go from newbie to consistently profitable?
I was actually, you know, in the first 2 years, I'll say on my second year is really when I was already kind of at that break-even stage, right? So I was just breaking even all the time. And really what I looked at more was just money management and, you know, really lowering my position sizing, focusing on that percentage-based risk, and obviously paying attention to my risk reward per trade. It was really as simple as that. The strategy is the same, right? You know, just looking to improve on a day-to-day basis, you know. It was more or less like not how can I be better, right? But how can I eliminate more mistakes? Because if I can automatically eliminate more mistakes that I'm making, I'm obviously going to improve with that, right? So it was really about, you know, eliminating mistakes, not over trading, you know, and just focusing on the tight money management, on a very strict money management system.
Thinking about a trader's mindset, do you have any special techniques you can share with us?
In what sense? Like
a mindset hack or a tip that somebody might be able to apply to their own sort of trading or their own mindset. Something like a tip.
I would say definitely stop looking at your P&L during the trade itself, because that'll obviously cause emotion. That'll, you know, the thing about when you're trading is, right, before you enter a position, right, you're thinking logically. Right, you're looking at the chart, you're thinking logically. The second you press that buy or sell button, right, you're already, you're already supposed to know where you're going to get out if you're right and where you're going to get out if you're wrong. So the best thing for you to do is just sit on your hands, because once you have live money at risk, you're no longer going to be thinking as logically as you were before you entered that position. So, you know, it's as simple as stick to your stop loss and take profit levels. Really focus on that money management and stop looking at your P&L during the trade. And one thing, like I said previously, just really focus on that percentage, on the percentage risk, on the percentage gain. Not really look at, you know, am I up, you know, $100, am I up $200? Just focus on the percentage as well, and the pips.
Yeah, I like that actually. It's the first time I've heard it on the show, where it's like, you know, you're thinking logically before the trade, and then as soon as you hit buy or sell, you go into the emotional state. Well, you know, you call it less logical, but, you know, I suppose for people that have mastered it, it's less logical. For people that haven't, it's probably full on emotional. So, sure. Next question: what's your favorite entry setup?
Oh man, my favorite entry setup. Would you say when it comes to candlesticks or the actual setup itself?
It's up to you, mate.
So basically, you know, my favorite trading setup that I do trade would be more or less like a break and retest setup. So I'll wait for price to just break a level of resistance, right? Because what that tells me, if, you know, buyers have held this level, or sellers in this case have held this level of resistance, you know, 1, 2, or 3 times, right? Once buyers have broken through that level, I want to see if price will come back to that specific level that was broken, and if buyers will actually hold that level as a newfound level of support. Right, so that's kind of my favorite setup. I'll wait for price to come back down to that zone, right? Because support resistance is a zone, not really more or less just like a specific price. That's how I see it, right? Then I'll go down to like maybe like a 15-minute time frame, look for an engulfing of some sort, or a price action signal that price is going to continue to go up, right? You know, if buyers can hold that level, then you know, I'll set my stops under the level, and then my targets will be pretty much at the high of where buyers broke through that level. That's probably my favorite setup.
And what strategies do you use to exit or manage active trades?
I'll pretty much be looking at Fibonacci ratios. So in confluence with that break and retest setup, let's say price had pulled back to like a 50%, then my exit strategy is pretty much to just get out at the high or at a negative, or at a higher extension in the Fibonacci ratio range.
What's your recommended trading book or resource?
Oh, definitely Market Wizards by Jack Swagger, for sure. For sure.
If there was one thing you'd recommend any retail trader spend the next month mastering, what would it be, why, and how could they go about mastering it?
Oh, man, the next month, I guess this depends on every person, right? It's more or less, I would say, something that's really helped me a lot is focus on having a tight money management system and see where your trading performance goes to that. See how you're more or less emotionally doing per trade when you definitely have lower lot sizes, because at that point in time, you'll be able to think a lot more logically, because the swing of your P&L in your account isn't as big as, an improper risk management system. So definitely I would recommend, just focus on a proper risk management system, and then, just see how that works out for you. You'll tend to find that, a lot of break-even traders will be profitable at this stage in time, especially after a losing streak and then a winning streak comes by, especially if they're paying attention to the risk to reward. So if I were to sum it up, pay attention to your money management and then look at the risk to reward per trade.
What's your preferred broker and trading platform?
It depends, because I am funded with FTMO. So my preferred broker with them is Purple Trading. I do use MetaTrader 4. On my personal accounts, I have Oanda, and again, it's MetaTrader 4.
What's the worst trade you've ever had?
Oh, man, the worst trade I ever had. I'll probably never forget it. It was emotionally scarring. I believe I was going long on a crypto pair, right? I was going long on a crypto pair, and I was just completely wrong. I was a little bit heavier on a position size than I should be. I ended up losing about $45,000 on a single trade, let alone a single hour in that one position.
Damn.
Yeah, that was probably the worst trade I've ever experienced.
And what were your emotions like whilst you were losing that money?
Oh man, immediately it was just straight depression. Straight depression, and it felt like a girlfriend had broken up with me. It was worse than that. It was horrible.
And how long did it take you to get back into the saddle?
Oh man, it took me like a good week or two just to get back into the market after that. Funny enough, I recovered fairly quickly from that because I stopped trading crypto, and that's when I started trading gold at that time.
Okay. Right, now, last question before we get into the wrap-up. So what's the... if you could leave our listeners with one piece of advice, what would it be?
I'm sorry, can you repeat that?
If you could leave our listeners with one piece of advice, what would it be?
Oh, man. One piece of advice. Definitely, I would say, trying to eliminate as much mistakes as possible and focus on a rules-based system. That would pretty much be the one piece of advice I would give. Just try and eliminate as many mistakes as possible, keep track of your progress, and then, try and focus on a rules-based system. That's what's worked for me.
And I'm actually going to throw in one more question here around, just because I know a lot of guys are probably interested in getting funded from the likes of FTMO and others. I mean, how did that process sort of play out for you? When did you decide to, head down that route, and at which point did you think, okay, well, look, I'll be better off getting funded here, and also the process of getting funded, was it a rocky road or was it smooth sailing?
Yeah, so I've always traded my own capital for a very since the beginning, you know what I mean? And I do have a large amount of capital in a trading account that's under my own name. But someone had brought it up to my attention, like, hey, I'm thinking about doing this FTMO challenge, blah, blah, blah. I looked into it, and they offer funding for, skilled traders. Obviously, you need to pass their challenge and verification process. And the way I saw it as, if you're somebody that's undercapitalized and, you don't have a lot of capital in your name, this is a great route for you to take because you can get funded six figures. And the way, I see it is, okay, you may only have a $2,000 or $3,000 trading account, right? So if you make 10% on a $3,000 trading account, you just made $300, right? So imagine making 10% on a $100,000 trading account. You just made $10,000, and you're going to be able to keep $7,000 worth of that, right? That can be life-changing to a lot of people, and it'll allow a lot of people to actually live their dreams and actually follow a normal risk management system. Because, one of the number one reasons I do feel like traders fail is because they are undercapitalized and they're not following a proper risk management system. So, you're kind of eliminating both of those, reasons right there. You're eliminating being undercapitalized, and it's going to make you more of a disciplined trader. And that's something I've definitely noticed as well. And I've incorporated into my own trading, such as adding a maximum daily loss and, adding a maximum loss to my account as well. Because before, I didn't really have a maximum daily loss. I would just, stick to, 1 to 3 trades per day. But now I've actually added a maximum daily loss, as a percentage-wise on my trading. So how the actual challenge and verification went for me. The first challenge didn't go too well. I was under, I feel like, a lot of pressure in trying to complete their, 50% minimum days. And I definitely had a timeline. So it didn't go too well for me, and I didn't understand the maximum daily loss. I thought, you could only lose $5,000 within, that day. I didn't know equity would actually be, counted into that. So I ended up losing because of that. So I retook the challenge. I ended up passing it, fairly easily too. I ended up passing it fairly easily. I ended up passing the challenge within, I believe, like 3 or 4 days. I met their profit target. And then for the rest of the days, I kind of just, entered positions here and there just to get me by for the minimum trading days. I did that for the challenge and the verification process. I passed that fairly quickly as well. But one thing, it did take forever. It took quite some time because there's a confusion in the email for me to actually receive like the contract they send you and the actual funded account and everything else. And the main reason I actually decided to do the FTMO funded trader challenge program was because you can actually stack your accounts. So if I do the challenge verification 3 times and I pass them 3 times, instead of trading with $100,000 worth of capital, I'm now trading with $300,000 worth of capital. And along with that, they also have a scaling plan. So if you're profitable, I believe it's 2 out of 4 months, right? If you can profit, I believe it's 2% or more out of those 4 months, right? Then they do add 25% to your account balance. So I believe it's within like 16 months, you can just gain 100% just by being profitable. So, they have a lot of pros and really not many cons at all. I would say the only con is you can only withdraw once a month when I'm typically used to withdrawing from my trading account bi-weekly. So, that's the main reason I did it, so I can have way more capital to my name when it comes to trading. And again, imagine making 10% on a $300,000 account. That's, $30,000. And that's with low risk. So, like I said, it'll be definitely life-changing for a lot of people.
That's really interesting stuff. I think quite useful for the guys out there thinking about getting funded. Now, last question. It's not a normal question I ask, but given the fact you're only 21 and you've got all the Lambos, you're living the dream life with Miami and jet boats, and you've cracked trading. I mean, what does the future hold?
Oh, definitely holds a lot. Eventually I want to have my own hedge fund, if that's what you want to call it. I have a lot of plans in mind. This is just the beginning for me. So, the cars wasn't really like much of an accomplishment. There's definitely way more I want to accomplish. It's definitely way more I want to accomplish within life.
Nice. Brilliant. Well, look, before we wrap up, what's the best way for the listeners to get hold of you?
They can just contact me on Instagram. It's really simple. It's Lambo Raul, like you said.
Okay, yep, Lambo Raul. Right, so guys, Raul, thank you for coming on the show and sharing with us today. Everything we've discussed here, along with all the links, are in the show notes. To find them, simply search for Raul in the search box on tradingup.com. That's RAUL. Until next time, I wish all my listeners trading happiness and success. All right, folks, so there you have it. Interview with Raul, done and dusted. I know you would have enjoyed it. If you want a bit more, if you want to be able to like really sink your teeth into this stuff, then I do recommend checking out the video we shot after the show, which is completely new content from what you heard here. A little short video where Raul basically walks us through one of his recent trades and his exact thinking around that particular trade. Okay, so you sort of really get a good feel for what his strategy is and how he sees the market. Probably one of the best videos I've shot on the show in quite some time. So guys, recommend watching this if you get the chance. Easy to do. Head over to tradingnut.com, search for episode 71 or Raul in the search box, and you'll get it, or it should be there if you're listening to this straight away. There are links in the show notes as well if you want to get access to that video. Now, you can also, the other thing I want to do is get you guys filling in the survey that's asking questions about funding providers. I mentioned that at the start of the show. I'll put a link in the show description, or you can just head over to tradingnut.com, find Raul's show, and basically fill in the survey there. So there should be a link on that page as well. I'll flick it through my other channels. Really want to get your feedback. I have a lot of funding providers on the show already, and I want to get some more information from you guys as to how you sort of see this experience playing out and what your preferences are. All right, guys, so that's tradingnut.com/funding survey. Great if you could fill it in. I'd love to see your responses. All right, folks, until next time, have a great trading week, and I'll see you in the markets.